Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on SPY, IWM, and QQQ. So we did not get much follow through to the downside, and I was talking in the last video yesterday about correlations. We saw oil with a bearish reversal candlestick, natural gas with a bearish reversal candlestick, the dollar with a bearish reversal candlestick. And as we headed into the morning today, we woke up this morning. I woke up at 6:30, started looking at the market, and I see oil is bouncing. So I look at the oil chart and I say, okay, it's very unlikely that oil is going to confirm this bearish reversal candlestick. So that's going to give a point in favor of the market bulls. We had the dollar seeing a bit of upside. It was not confirming the bearish reversal candlestick. So before we even started much pre-market trading, I could see that because of those commodities holding up, and I know that their correlation to the S&P 500 has been fairly strong the past couple of weeks, that the likelihood that we saw an all-out dump, if those instruments are seeing a bullish reaction to the start of the morning, were less likely. So I was still watching the tech sector. I had my eyes glued to it first thing this morning. We did get a bearish break on the tech sector, losing the low of yesterday, just like we got a bearish break to start today, losing the low of yesterday as well. But watching the 5-minute time frame on the tech sector, we fairly quickly saw a double bottom form within the first half hour or 45 minutes of trading. We had a double bottom at the low of the day, and then the bulls showed up. And while the bulls at the tech sector were building a double bottom, the financial sector was moving up towards the high of the day. So one thing that we keep seeing holding this market up is that the rotation back and forth. When the tech sector lags behind, the financial sector picks up the slack and is strong, and vice versa. So this morning when we saw a double bottom at the low of the day on the tech sector, the financial sector seeing strength, and then the tech sector breaking the lower high pattern on the 5-minute time frame, heading back towards the high of the day, we knew that it was unlikely we were going to see any significant weakness to the downside from there. So the bulls did see some decent upside. We did see weakness at the afternoon, the last 2 hours of trading, but it wasn't entirely significant. So we do have a bit of an indecision candlestick. It definitely goes in favor of the bulls just because we did not see follow through to the downside. And look how similar these candlesticks are. From the dump day, on the 1% dump day, we saw some follow through to the downside. The bulls bought the dip and held up. Same thing here, a bearish close, a lot of bear momentum, little bit of follow through to the downside, and the bulls showed up. More of an upper wick on this candlestick, rejecting from the middle Bollinger Band on the back test. We still have our downtrend resistance to be watching. But the bottom line is the bears have been unable to really carry over bearish momentum from one day to the next. So we have to see the tech sector roll over, which it has not done. We held the low of the week, just like the S&P held the low of the week. So still holding on. A lot of individual names are forming bearish reversal candlesticks on the weekly time frame this week. So we will be keeping an eye on those next week. But in terms of an all-out dump, the bulls are safe for now. We're going to be watching 234.43 and 233.91 as a couple key support levels. And this 50-day moving average is going to be right at that 233.91 level either tomorrow or Monday as it begins to, or as it continues ascending to the upside. So the weekly time frame for SPY is a bearish candlestick, and we were able to fend off too much significant downside the last time, holding exponential supports. We're holding the 8-period exponential support here again, 234.42. Bears would love to close under that level tomorrow, but if we don't, we will be watching the potential bearish MACD cross and the potential bearish TCG cross of these exponential moving averages going forward. And of course, the low of the last dump, 231.61, is going to be a very important support going forward, because if that were to break, it would just be another lower high and then lower low. So where we head going into the end of the week here, the bulls keeping in control on the daily time frame. Now they have to get over this downtrend resistance line to really prove that they are back in control, looking towards the all-time high. IWM the strongest of the three, which is surprising. I haven't said that in a long time, but we had a close up at the high of the day with a lot of bulls buying the dip. We had a lower low here as well before it turned around to favor the bulls, and we're looking at resistance of 135.63. Then I'm looking at the middle Bollinger Band of 135.82, and then the high of yesterday, 137.43, will also be a resistance level to be watching. So the bulls have a lot more momentum here on IWM than we do on SPY because of the upper wick on SPY rejecting from the middle Bollinger Band resistance. We don't have that on IWM. We have to test that middle Bollinger Band tomorrow, but it's a clear bullish reversal candlestick, and the bulls will be looking for some confirmation tomorrow. The weekly time frame for IWM holding on, trying to keep this bearish TCG cross from following through these exponential moving averages, and so far they're doing a good job this week with the recovery here today. So for IWM, it's going to have to require a break of 132.40, the double low that we saw on the daily time frame down here, to be a very convincing bear break from this point. As of right now, the bulls putting a stop to the bleeding from the bearish action yesterday, as it did SPY, but a lot more strength at the end of the day. QQQ, indecision here, and we have to be watching this middle Bollinger Band, and we're going to be watching the potential bearish TCG cross. So we're watching these exponential moving averages because they are certainly playing a part. We've been so strong in 2017 that we've held these levels, these exponential moving averages, time and time again. So we're close to losing it here on QQQ. The tech sector did see a bit more weakness than the financial sector today, and we'll see if that carries over into tomorrow. Basically, we're going to have to see the tech sector break the low of the week, 23.94 on XLK, in order to see bearish action in the S&P 500 to end the week tomorrow, in my opinion. So QQQ holding on here. The low of the week is 131.56, and we bounced off of 131.70, so still holding that level, coming off of that all-time high. And again, what stands out is not seeing follow-through to the downside. We have not seen two significant bearish days in a row on QQQ in a very, very long time. In over 3 months. We've had two bearish days, but that's not significant. And we've had lower wicks buying the dip. That's not significant. So the bulls are doing a really good job of keeping these big bear days just to one day before recovering. And the weekly time frame for QQQ is a bearish reversal candlestick to watch next week. So 2 weeks ago, so many individual names have bearish reversal candlesticks being negated from last week, and now we have another bearish reversal candlestick forming. Apple has one as well. Facebook's forming one. So we need to be watching all of these weekly candlesticks because they're telling us that the bulls are tiring. Last time the bulls were able to shake it off. We'll see if they're able to shake it off next week as well. And that's what we've got heading into tomorrow. Bulls doing a good job. Got to give them credit. These sectors seeing their rotation and seeing the ability to carry and pick up the slack for each other when we do see weakness. And tomorrow, how we end the week is going to have a very significant impact in the kind of momentum we see heading into next week, and whether or not we are favoring the bears to confirm these reversal candlesticks, or whether or not the bulls are going to look to negate them for the second time in a row this past couple of weeks. So I appreciate you watching. We'll check back in over the weekend. Certainly a lot of interesting action and a lot of correlations to be watching between the dollar and oil and the market and gold. And I'll see you tomorrow.